The U.S. and China officials plan to hold economic talks in Beijing this week. For a look at these and some other geopolitical headlines, we want to welcome Clocktower Group Chief Strategist Marko Papic. Marko, thank you for joining us this morning. Let's start with this move that we've seen in Asian stocks overnight. These Chinese markets moving up 3, 4, 5% on the idea that Xi Jinping is going to be briefed on the markets later today. The supposition is that they could be doing more to prop up the markets. What would you tell investors about what you've seen this year when it comes to the Chinese and the stock markets?
I think it's very much a tactical opportunity, maybe to play a dead cat bounce. But the problem is that equities are not going to be supported by an equity support plan. What China really needs is something that fixes the fundamentals. They are in the middle of a secular stagnation, sort of what we had in 2010, 11, 12. And they're struggling to even cut interest rates. So, what they really need is a much bigger fiscal support package rather than focusing on equity performance. I also doubt that President Xi really cares about equities all that much.
I don't know. They've changed their tune. An economic downturn is a really big deal. They have tried to woo more foreign investment because for the first time you've seen people pull away, companies pull away and not want to invest there. They definitely seem to be changing your tune. I don't know if American businesses can trust that, if American investors can trust that, but they have changed their tune pretty drastically because it is starting to impact them at home.
Well, again, it took them so long to even contemplate cutting interest rates, and that's what worries me. If it takes you that long to cut interest rates, when are you going to put in a fiscal support package? The way I would tell investors, the good parallel for this, it's not our experience in GFC. It's not even Japan. It's really Europe. Remember where we all used to wait for the summits to end and then Merkel and Sarkozy would come out and everybody would be disappointed? Use that as a mental framework for this. I think there's going to be more disappointments before they actually put in something that will change the fundamentals and create a sustainable entry point for equities.
But let's look around the globe. When you look at the Middle East and all of the geopolitical turmoil there, what do you tell investors, not just from investing in places like Europe and the Middle East, but what about the oil outlook and what that could mean?
We wrote a piece on October 8th, so day after the Hamas terrorist attack in October 7th, and we told our clients that there would be very limited macro implications of the Israel-Hamas war. And one of the reasons for that, oil is down since then, so one of the reasons for that call at the time was that Iran and Saudi Arabia actually have a détente that is holding. They negotiated this in 2022. Here in the U.S., we mostly covered that from the perspective that China helped negotiate it. That was the big sort of news. But that's irrelevant. What was really relevant about that deal is that Saudi Arabia sort of conceded to Iran on a number of geopolitical issues, but in return, Iran has kept its various proxies from attacking Saudi energy facilities. So when you think about the Houthis, everyone's focusing on where the Houthis are attacking. We should be focusing on where they're not attacking. In 2022, they attacked Abu Dhabi, where I'm flying in a couple of weeks. In 2019, they attacked Saudi Arabian oil facilities. They're not doing that. And that's a really important factor of stability, even though there's chaos.
Look, I can understand the stability in the oil market potentially on that. But what they have not stopped their proxies from doing is attacking not just Israeli targets, U.S. targets, any of their U.S. allies, and basically any ship that's going through the Red Sea right now. That sort of potential escalation, because some of the things that have been done to this point, including the U.S. service members who were recently killed just a few weeks ago, that demands a response. We don't know what that response is going to be, but it's coming.
Well, we've had one, and the U.S. is focused on Iranian proxies, not Iran itself. So far, and the statements on both sides have been, we don't want a wider conflict. Obviously, there's always a % chance for something to go awry. My point is that Iran-Saudi Arabia deal, that détente, is a factor that has kept oil prices in check. Now, it's much easier to be sanguine with oil prices at 88 on the day of the terrorist attack. Now, with oil at 75, I'm actually advising clients, hey, look, you have a nice entry point for a long oil position, not so much because of geopolitics, but sure. At this point, some risk premium does make sense.
I'm amazed that you were able to kind of look at that on October 8th, because that took a lot of people a lot of time to get our heads around, and I think it's a situation that's still evolving.
It's definitely still evolving. Our framework is one of constraints. So what I focus on is what policymakers and politicians can do, not what they want to do. And a lot of folks in the Middle East definitely want chaos, for sure. I agree with you. But there are constraints and material impediments to that happening at this point.
And you think that that holds through 2024? Just like a year ago, people were so concerned that these things would, the war between Russia and Ukraine and all of these things would pop up. You think all of these many kind of boiling hotspots don't create bigger problems for this year?
For this year, no. I think it'll be interesting what happens next year, specifically because I think President Trump will, if he were to win, he will use his negotiating tactic, which has worked well in the past, of maximum pressure. And so that could sort of rattle the cages of some of the actors in the Middle East. But for now, I do think it holds. And actually,
Marko, do you think that the Saudis continue to make in treaties with Israel that supposedly was part of the rationale to try and scuttle that deal? Will that continue? Will that allow the détente with Iran to continue if they normalize relations with Israel? So
that's a great question. I think that for Saudi Arabia, the détente with Israel is not as relevant as I think we make it to be. The détente with Iran is actually a much bigger factor for their security.
Who do they dislike more?
Who do they dislike
Close,
more?
Isn't it?
You know, the way I would put it, Joe, and
Yeah.
I think this is important for us to understand, because Saudi Arabia gave up a lot in that deal with Iran. Their priorities, number 1, 2, 3 to 100, is economic development.
Right.
And that's very interesting.
Almost Western economic, Gulf, almost Western economic
It's the closest thing to Meiji restoration of Japan that we have seen in the last 100 years. I cannot really emphasize how profound Saudi transformation is. And so what I would say is that they will continue to be very realist and focused purely on domestic socioeconomic stability, which means, you know, it's up to Israel and Iran to make a pitch to Saudi Arabia, not the other way around.